think we're just about to hit 12. So yeah, good afternoon, everyone. Welcome to this panel. We're going to be speaking about initial coin offerings and security token offerings. So just let me begin and set this up for everyone. So 2017 was touted the year of ICOs, and it was when the craze took off and companies, raising record-breaking amounts of money, as high as 257 million in just a short amount of time. That was Filecoin. So that's what happened in 2017. Then came the regulatory clampdown in 2018, where lawsuits were filed and tokens were deemed securities. And then emerged security token offerings. And it came out as a more legitimate way to raise money, and now there are security token marketplaces and exchanges. So joining me on the panel today, I'll introduce them once again, to discuss kind of where we are at in terms of the sentiment around ICOs and STOs is, I'll start from my left. Yael Tamar, the CMO of SolidBlock. You just heard from her partner before, or her advisor. So SolidBlock, as you just heard, is a new fundraising vehicle offering a compliant global platform for the issuance and trade of digital securities backed by real estate and other assets. And then we have Jerome Tichet, the director of Consensus Solutions in France. He's also the founder and president of Ethereum France, which is the largest blockchain-oriented nonprofit in France. And then we've got Dr. Daniel Dimas, partner and head of blockchain EMEA for PwC Strategy and. Dr. Dimas is also a co-founder of Swiss Finance and Technology Association and the Crypto Valley Association, so welcome. So let's begin. Where the ICO and STO trend is today. So, I mean, Daniel, just to kick us off, what is your assessment of the trend today and the overall development of ICOs and STOs?
Yeah, thank you, Samantha. I think we're in a very interesting phase of this whole development. As you said, in 2017, we all remember there was a huge craze, and basically a lot of startups found a good way to get a lot of money without doing actually much for it in terms of fundraising. What we've seen is, and we're actually covering this every 6 months with a study. The first one we did in mid-2017, so we're kind of close at the pulse of it. There was quite not much happening during the so-called crypto winter, which ended, I'd say, this May. I'm sure you all followed that very closely. And since then, we've seen some real positive pickup. And I think it's positive because we don't have that craze from 2017, where basically startups with just a clumsy white paper, no business plan, no real assets behind it, just were raising money. I mean, most of the ICO projects that I look at are pretty fundamentally well thought through, well prepared, a lot of work going into that. And that's just the ICOs. We've also seen the IEOs, which is very interesting. So, people got the idea what used to be common in IPO. When you do an IPO, you go to an exchange and you launch it there, usually, and the same happened with the ICOs. So we've seen some very interesting IEOs, I mean, the Bitfinex being one of that. And then, of course, we're sitting here not because of those two things, we're sitting here for the STOs. And the securities token offerings definitely going to be even more interesting, even more disruptive, and it's going to change the business landscape much more, because it's not just a way to make crowdfunding and raise money for something, but it's a way to actually, as we just heard from the previous speech, for example, in real estate, you can create tokens that actually have a underlying asset value.
Yeah, so real estate is actually an interesting industry that makes sense for STOs. So, I mean, Yael, it'll be great to hear from you, and for you to give us an overview of kind of the industries that benefit most from ICOs and STOs as well.
Okay, absolutely. So both ICOs and STOs are just new fundraising vehicles. Now, the name of the game for ICOs right now is regulation, accountability, and transparency. Now, the reason for this ICO craze that we discussed was the fact that a lot of people for 2 or 3 years prior made a lot of money with cryptocurrencies. So for them, it was basically kind of throwing money into projects, doing minimal due diligence, kind of liking the idea, feel like I'm in a casino, I'm gonna invest in 30 projects and hope that not all of them are scams. So that was basically 2016, 2017. Now in 2018, those people kind of already invested, and more traditional investors came in, right? Some accredited investors, some retail investors that understood the potential. And that's when the ICO market has entered the winter, because everybody understood that most of these projects were not valid. Now, STO was born out of this trend, because we need a better vehicle where investors' money will be protected and backed by actual assets. Now, when we're looking at actual assets, what are these, right? So there's several types. There are physical, and then there's also digital assets, and then there's intellectual property. So when we look at physical assets, we can look at real estate. This is the most obvious use case for STOs, is when you have real assets, which are either land or building, or maybe even a long-term lease agreement. So those are assets. Now, when you look at more digital assets, like intellectual property, like for example, pharmaceutical patents, or a formulation for, I don't know, a CBD derivative, or it could be just some sort of an intellectual asset that's not even written down or patented. So we could have those appraised, for example, art, right? And finally, you could have a very traditional business, like a manufacturing business with a factory line, with machinery, all of these are real assets, and you can apply STOs there. Now, I think that real estate is really at the forefront of this because of, number one, valuation. It's much easier to value than almost any other assets. And number two, because it's a very, very basic asset for investment. Almost 50% of population in the developed world own real estate, and a lot of people don't, and they want to get access to it. So that's where STOs are really, really attractive, is to give access to these investors where there is already a demand. We're just creating a new asset class that will make the same type of investment more available to everybody.
Well, thank you so much for that overview. So I just want a bit of time for questions at the end, but I just want to kind of wrap this conversation up and look, say, ahead in 2020. What's to come for the year ahead. So I mean, Daniel, that was really good that you're saying that we're still several years away from this really taking off. But what can we expect, kind of 2020? 2 months time.
My main world, I guess, is China. So I'm going to leave you with that. China is, the largest country in the world, seems to be very crypto friendly. I think it might lead even the STO world, depending on how things go. Big countries with populations that get richer and richer. In Asia, is always one of the leading markets in this space, in the crypto space. And I foresee some institutions starting to come into the space.
Great, thank you. Thank you very much. And so, now we've got a bit of time for some questions from the audience, because you've heard a lot from my panelists. Are there any questions? So there's a gentleman over there. I think there's a microphone coming to you.
Thank you. I'm trying to think of the value proposition you mentioned. I'm a securities broker, but I'm trying to think as an investor right now. So if we still need for STOs institutions of trust, like an exchange and PwC doing the auditing and JP Morgan doing the analysis.
Has been so appealing in the beginning, at least, was the fact that the users retain control over the currency, or have some sort of a control because of the decentralization. And when the Lehman Brothers and the JP Morgan of the world come in and issue derivatives and short their own financial products to bet against them and then sell those products back to financial institutions, that kind of you have faith in the whole system collapses, right, together with the market. Now, security token is actually a really cool product in my mind. One, because it's directly backed by assets. And if this market is transparent to a large extent, and you have players such as PwC and other analysts working together with us to ensure that the assets are actually owned by, you know, who it says in a private placement memorandum, PPM. And this is a regulated industry, right? So there has to be a legal document attesting to the ownership of the asset and to all of the business model even, like what are you getting, what kind of yields are you expected to get, together with market reports, right? So this is actually a very, very legit industry in this way, especially in the real estate space. Now, as to the ability to create further derivatives or ETFs or funds of funds and other types of products, you know, by these institutions, right? They're gonna come in, they're gonna realize, wow, this is a gold mine. This is a new product I can take and multiply it, right? That's what they do. That's what banks and financial institutions do. They take like a base product, and then they say, well, we can short it, we can future, we can option it, and then we can make times 100 on it, right? So I don't see that happening with, well, right now I don't see that happening necessarily with security tokens, but I think that we should foresee this and maybe even in terms of regulation kind of prevent some of these things from happening, right? But, however, you know, because STOs are available to accredited investors directly, you don't have to go to JP Morgan, you don't have to go to a broker to purchase a security token or to trade a security token. As long as you comply, as long as you are the type of investor that can invest in a specific offering, and right now, unfortunately, it's mainly accredited investors globally. If you can invest, you can go directly and you can buy the security token either over the counter or on some exchanges, right? So you don't need stockbrokers. So I see this industry as more promising in terms of the integrity of wealth, right? Integrity of wealth generation. I hope that I understood the question and answered it. Just a quick comment. Decentralization definitely means different things to different people, but I would view it on a spectrum. And I'll give you an example in our industry, let's say the real estate industry, which has traditionally closed up different investors from coming in. Let's say investors of apartment buyers of a certain race from coming in and buying apartments in a neighborhood, gentrification and other things. Now, blockchain will create a much more fair layer for people to come in. So, you know, while SolidBlock, for example, is a centralized system of token distribution, there are certain rules because of the security regulation that you have to abide by to get on the whitelist to buy an asset. So in most places, like I said, you need to be an accredited investor, pass KYC, AML, but that's it. Who you are, what you do, how old you are is not relevant. You can come and you can invest. You can come in, you invest in a trophy asset wherever your heart desires. So that's an example of decentralization for now. I hope that the market is going to open up to retail investors, so then we even lower barriers even more.
Yeah, that's completely, I think, why people that believe in tokenization believe in this model. Like if I want to purchase an apartment, like it's going to cost me 100K to like the minimum ticket if I want to own it on my own. If I want to buy a share of a real estate fund, it's going to cost me 5,000, something like this. That's the entry ticket. So with tokenization of real estate, that's the beauty of it. I'm able to invest 100 euro eventually in the future into 100 different apartments, and applying portfolio management to those apartments, those flats, is actually very appealing.
I think this is the amazing vision. I mean, you can be in a favela in Brazil, in Rio de Janeiro, or you can be anywhere in Africa, and you can buy a security token that is linked to a real estate in Europe, in France, or in Switzerland, for example, which are supposed to be stable real estate markets. That is something you can do today, unless you are very rich and have very good lawyers and very good banks supporting you. But like this, you can maybe fractionally, you can just have your month's earning, 100 euros, 200 euros, and just say, okay, I don't want to keep this in cash, I don't want to keep it in Bitcoins. I'm going to buy a piece of an apartment in Paris on the Champs-Élysées. I love the Champs-Élysées, I've never been there, but I like the thought of owning something there. And I pay 200 euros, I get a fractional token, and I own it. This is something that I think is a true vision to aspire to, because today, for the less fortunate in this world, there's no way ever in their life they're gonna be able to do such an investment.
That's maybe the real shift in paradigm here. It's not from centralization to decentralization, and this narrative of saying decentralize this, decentralize that, or my project is decentralized Uber or decentralized that. It doesn't stick compared to the narrative of having an alternative, having your ownership linked to paper on the one hand, and your ownership linked to your public key on the other hand. That's where we are heading, and I believe we can still retain control over this public key.
Cool, and on that note, we're going to have to wrap this panel up. Thank you very much for your questions, and thank you very much to the panelists. So if you can give them a round.
Yay! Amazing!
And congratulations to the University of Bulgaria and teachers for setting up this wonderful event.
Yes, thank you.
Thank you so much. Thank you so much for having you with us. You have given us